And in fact, we now have Sajid also, who's joining us with Harsh to discuss more in terms of what's happening with the BSE NSE. Key questions over here are what happens with regards to BSE taking it being a listed player. The stock is not really reacting to the way street expected it. So has BSE been able to defend the turf? And how will it make a difference to BSE, taking into consideration it's a Thursday expiry for BSE and a Tuesday expiry for BSE? How are you looking at it?
We both have a contrarian view for that. Actually,
and that was the reason we got you on the table right now.
My view on the BSE part of it, yes, it is a sentimental negative for BSE because BSE was gaining market share on a Tuesday. That's primarily because on a Friday it had a market share of 20-21%, on Monday another 20-21%, and going into a Tuesday expiry it had a market share of roughly around 45 to 46%. Now that is going to be swapped because NSE will now have a Tuesday expiry, which basically means NSE gets 3 days of trading, which is there, and is able to get much better share of the trading volumes or the premium turnover which is there. But having said that, there are two factors that needs to be taken into account. One, that while there may be a short-term blip which is coming in over a period of time from now to September, we don't know how the market share is going to pan out. And if you see last October to now, the gradual increase of BSE's market share on Fridays, Monday and Tuesday, when it shifts on September 1st, there is likely that there will be a retention of that market for BSE, and that's it's a calculated guess. It may be I may be wrong, or I may go wrong on that part of it, but we saw a similar thing happening in October, November, when a lot of SEBI restrictions came in, and we said BSE and NSE will both lose market share, and BSE will be worse hit than NSE. But that was not the case. BSE's premium turnover rose, and as a result of that, premium turnover market share has gone up during that period of time. So, my sense is that that's the reason why street is little, cautious. There was no knee-jerk reaction that came in for BSE when we spoke.
So the monthly expiry angle is absolutely interesting to watch out for, and I think the subsequent data after September will tell you that. But Harsh, you've been looking at a lot of brokerage reports, and you have a completely opposite view in terms of what Sajid is saying. How are you looking at it basis the informed views that you have so far?
Yeah, so I'm going to first talk about the brokerages, because the brokerages are in favor of what Sajid sir is saying. What most brokerages seem to be suggesting is, so let me start off with the Jefferies. They believe that the volumes will be impacted a tad and there is scope to mitigate that impact. They're expecting a 5 to 10% impact on volumes. They're saying that BSE's ability to build liquidity in long-term contracts can offset the impact coming through as a result of this, and they've trimmed EPS by just 1 to 2%, but the target price being 2,900, not too far from where we are currently. Let's look at UBS as well. Very similar commentary. Change in expiry mathematically can impact around 15% of volumes on loss of one trading day for BSE. That's largely how even I would look at it. And I'll pull up that table which I have sent, and that will give us perspective. Also, Goldman Sachs, they've cut target price 2430 from 2490. They're saying that BSE could lose 3 percentage points of market share, and BSE's FY26 EPS has been cut by 2%, but FY27-28 retained. Those are the views from all of the analysts. I'll just quickly point out that one table, if we can pull that one up, in terms of Tuesday versus Friday in market share, and that will just come up on your screen. Now, if you were just to analyze that, and this is where some of my pessimism comes in, if you just were to analyze that, there is a reason why a Tuesday expiry is favorable, and that is because you get to build on Friday, where there's a 23% market share which BSE enjoys, 27% on Monday and 42% on Tuesday. You look at the shift, if that were to happen on a Thursday, you will likely see just 10% market share on Tuesday, Wednesday will have 26, and Thursday will have 40. If I were to just deduct the 15% delta as a result of the Friday versus Tuesday move, which is T-2 technically, just that will kind of indicate that BSE will likely lose some amount, if not too much, at least some. And if that were to happen, as per Ambit, this is, average daily turnover market share loss by 15% will impact BSE's EPS by 10%, which is large for a stock trading at 82 times trailing 12 months. That's all that I'm trying to kind of
what I'm trying to say is that okay, the valuations are very rich for BSE as we speak.
BSE valuation versus the IPO, NSE valuation in the grey market. If you have to compare the two,
I think both of them have similar valuation.
BSE is rich as compared to the
BSE
way
is slightly more expensive.
Because the way NSE IPO has been flaring in the unlisted space right now, it's unbelievable, right?
No, but
so if you have to take both into consideration, how would you have look at it?
So the thing is that when the IPO comes in for NSE maybe 6 months or 9 months down the line, and the valuation continues to be similar, means today it's about 2,500 rupees or share or so. If it goes to 3,000 or something, which is another 25% from here for NSE, we are looking at 8 to 10 lakh crore market cap company coming on the exchanges. So, are you going to buy something which is 60, 70 times forward earnings? The question is that the investor has to answer that question, right? Because it's not in the private market. In the private market, what we have always seen is that the sales are happening at 30 to 40% premium to the fair market price, which is happening. And that's something which will be disappointing for many of the investors who are going in the private sector.
So are any brokerages saying that there is value in buying a BSE at the current market price?
No. So that's the simple answer. Except the Jefferies, which has a target price of 2,900, all the target prices are below the current market price. So I'm just kind of again putting it out there.
Yeah,
that,
but there is just to put one thing in place. There is a change in the dynamics which is happening in the last 2 weeks as well. If you look at the daily premium turnovers, they have come down both for BSE and NSE, and that's primarily because there is a regulatory oversight on the delta trading which is happening on the options which is happening. As a result of which options premium turnovers have fallen by 25 to 30% across every exchange, BSE and NSE combined. So if this is continues and there is going to be more tightening which is going to come in, the dynamics changes. What Harsh is talking about, the kind of volume shift which is going to happen, that dynamics also change because of the kind of free trade which is to happen through this trading desk across brokerages or across a lot of investors across the board. Simple as that.
So I think lots of views coming in on this one. But thank you, Sajid. Thank you, Harsh, for being here and sharing your views. But the clear thing is, I think we'll have to wait it out for September as well. And once it comes into practice, what the volumes are telling you. And as Harsh was mentioning, brokerages are not really gung-ho with regards to purchasing a BSE as well at the current market price. Not too much in the offing, but the stock is absolutely resilient with cuts of nearly only 1%, Puneet, coming in there.
Well, definitely. And I think what Harsh highlighted, the brokerages, while Jefferies has come out with a view, largely maintaining prices below the current market price. We also